effectively in doing this sort of keynote for today, I hope to just give a really high level on this as a topic, because I know, and I said this is, when I say super high level, I know that all of you do your own deep dives in your own sort of specific niche areas, but I think it's always interesting for investors to look at other potential opportunities or to learn about other areas which you can potentially add value to. So this is one of my favorite TED. Has everyone watched this TED Talk from Bill Gross? One person, wow. I thought everyone would have seen this. Okay, so this has been one of the most influential TED Talks for me, and it's by Bill Gross. It was done in 2015, and basically what he did was he did a study of the 200 companies that he invested into, and he wanted to understand, like, what are the reasons why startups actually succeed. And so he broke it down into 5 key elements. He broke it down as, is it the idea, right? Then he looked at, okay, well, is it the team and execution? Is it the business model? You know, is that what actually makes the difference? Is it the funding? Is it the access to funding that companies get that basically helps them really transform? And then the last one is timing. So when he actually broke it down to the areas, basically 14% was funding. And that was interesting because effectively noting how much money companies were raising, it wasn't the most sort of influential factor. Then looked at business models. What they realized, and this is when you hear about a lot of deep tech investors, a lot of deep tech investors are investing into businesses that don't really have a business model, you know, sort of at that point. But what they realize is that as companies go through their different phases, they start to figure out the right business model for their business. And I know I've experienced that myself. The idea, is it the idea? And obviously at that time, you know, the people were still in ideas. Now people are looking for more sort of traction. Team and execution. For me, I would have thought this would have been the highest one. And you know, in our psychologically, in our heads, we always think that team and execution are the key components for a business success. And absolutely, it plays a massive role. But the number one factor they found was timing. And I thought that was really interesting. If you look at the Australian stock market, if you look at the ASX, I'm sure a lot of you in your own portfolios have experienced either the upside benefit of timing or sometimes the downside and the difference it makes. And I found that interesting. So the example he gave was YouTube. They had their own version, I can't remember the name of it, but they had their own version of YouTube 1 to 2 years before YouTube. The problem was the technology wasn't quite right at that time. So when YouTube simplified their access to video, and they had more capital than YouTube, you know, at that point, and obviously everyone knows the success. It's crazy to now think that YouTube generates more revenue than Netflix. Right? That's how valuable YouTube is to Google. And I remember at the time people were saying, oh, they've paid too much for it, etc. So timing becomes an important role. So then I started thinking, okay, well, that's interesting. If that's where I'm starting, whereas the timing aspect, I like to think for myself from how can I focus on things for the next 5 to 10 years to simplify, because I like to have relentless focus on an area, no different to building a business. You know, the relentless focus helps. So effectively, when I looked at the generational trends, the millennial one sort of really stood out to me. Sort of me being on the cusp of sort of Gen X and millennial, you know that millennials are coming into their peak earning power, right? And also, obviously, we all experience a sort of Gen Z influence. And then likewise, Gen X as well, sort of in that sort of peak earning power, in that sort of peak wealth area. And then there's the role the baby boomers has, which from a WI perspective, we built our business, you know, sort of with the sort of baby, you know, high net worth sort of baby boom market. What I found really interesting was to learn about the millennial wealth transfer. And I find this is one of the most interesting things. And so I suppose my core thing I'll say is make sure you start bringing your millennials to our conferences. Deloitte did a study of basically saying $25 million, $24 trillion will be transferred from baby boomers to millennials over the next 15 years. The AFR put out an article at the end of last year saying that there's going to be $260-something billion per year for the next 15 years transferred from baby boomers to millennials. So that becomes also interesting from a whole bunch of different conversations where we think about. And then you start to think, okay, well, what are the key trends that are important for millennials when they're thinking about either investment or they're looking at this area? Because I know a lot of family offices are also sort of working with their next generation on the next generation of investments for their family offices, and then likewise for high net worths as well. So The key areas, sort of come up was obviously the access, not ownership, has been a key one that we've all seen, right? As far as that's sort of built, off the back of, whether it be Airbnb, Uber, etc., where you said decreasing amounts of sort of millennials and Gen Z looking, interested in owning cars. They'd prefer to actually rent it. And then likewise in so many different areas. So I said, like 25 years from now, the car sharing will be the norm and car ownership an anomaly. And you think that's interesting when you look at the likes of Tesla who are working on full self-driving, because in 10 years' time, do we just book it on an app, jump in a car with no driver, and then go to our destination, right? So what's the actual need to actually own a car? And then wellness is obviously one. I'm sure me, like you, I wear a tracker. All of us have got some sort of device or some way in which we try look after our health. But wellness is obviously a big area. And I'll go to what areas I think super interesting. But you can see that this is just an analogy they've given of the perception around smoking, the difference between 1998 and 2013. Funny enough, I just forgot the device. What's the device people smoke on? The vaping. That seems to be completely okay, but smoking, different story. How's that for marketing for you? Environmental, sustainable, good. If you look global EV forecast, 2020 was 2.5 million. 2030, they're predicting 31.1 million. What's really cool when you think about the EV market, whether it be you see the popularity of electric scooters, when you go to, when you sort of, actually even in Sydney CBD, you see the popularity of them. But when you go to sort of China or Asian countries, you see how popular they are. Likewise, electric bikes, as another example, the popularity. But obviously electric vehicles from a car perspective, it's really coming up to an interesting phase, and obviously there's a whole bunch of government incentive and mandates around that as an area. Plant-based protein obviously has been an area we've all seen, whether it be Impossible Foods, whether it be all the different range of sort of plant-based foods, and now obviously the marketing analogies that go along with it. But you can see why there's just the sheer growth that's expected in this as an area over the next sort of 10 years. Buy now, pay later, the one that Australia experienced really well through the eyes of Afterpay. But really now that's sort of going across so many different areas other than just then basically just sort of, when you see that people can buy a coffee on Afterpay, to me that is ridiculous. But it's like, people are doing that, or they buy a drink, on Afterpay. But that's coming across into business in all sorts of different shapes and forms where it's becoming that sort of access, not ownership, or the on-demand capacity. And the craziest part, obviously not now, but I was blindsided when I couldn't believe that they crossed the value of Telstra, and then obviously were acquired by Square. But you can see that fight, from an investment side for owning the transaction or having visibility over that transaction data. This one's been interesting for me, and I use this in my presentations because really as a founder, this is what we need to be thinking about. It's that move from, basically the efficiency to on-demand. You think, put it simply, all markets move towards efficiency. If we as founders or we as investors can discover opportunities or create opportunities that basically help people get access to something simpler, faster, on demand, that's cheaper, etc., I said, then we're putting ourselves in a fighting position. I said, all these ones, I said, no one would have expected 10 years ago how much they would be massively disrupted. Actually, I'd say maybe 15. So this one, one of my favourite people, and I'm sure a lot of you as well, has been sort of Cathy Wood's work that she's done on the area of innovation. I think what I like about the way she did it was she took what I was seeing in what I see from day to day and just put it into a different description. See, for me, for investments, and you probably would have noticed in the interview with Jason, I always thought things about sectors, because often when I'm speaking to investors, I try and understand what are their sectors of interest. And then you realise that when you're thinking about the next sort of 10 years and how innovation unfolds, sectors is only one aspect, but really each sector has its own platform technology that it's going to be working with, to build that. And I'll go through those different ones. But the interesting things about those platform technologies is they typically abide by this area of Wright's law, where he discovered that effectively the more that they manufacture of a product, the more the actual cost comes down. So what areas are we actually seeing this? Solar panels, as an example, right? Solar has now become the cheapest form of electricity available to people, right? Because of the sheer amount of production and the demand as it goes up. Battery cells, the cost of producing battery cells, as another example, has come down to the point that in the next 2 years it'll be cheaper. It said the goal for battery cells, especially in the US, it'll be cheaper for people to own an electric vehicle car, more so than a traditional ICE vehicle. And that becomes interesting because then what happens to the demand? So Wright's law is an interesting thing to look at. And then likewise in my own business, it's like you think, how can you overlay Wright's law into it? And I'll go through it. So, because this also relates in my mind to software businesses as well, in a different way that people actually expect. Metcalfe's law has been the transformation of every single one of us in this room has benefited off Metcalfe's law. Right? And it's the simple Metcalfe's law is the power of networks. So whether you've invested into crypto or you've invested into tech companies or you've invested into social media networks, effectively what the Metcalfe's law is that all the different networks and platforms that have been built basically helps with that distribution aspect. So if you've just got 2 people that can connect, that's got a certain value. But if you've got 1 billion people that connect with each other, the power of that network becomes infinitely valuable for what can actually be backed off it. So if you factor in those 2 factors of Wright's law and then Metcalfe's law, you start to think this is really interesting, right? Because what it means is that companies will grow faster than what they did previously. Something like an Immutable X, because of the power of network, the power of community, values of companies accelerate a lot faster than what they did previously, to the point that for some of us, we just don't understand how companies are achieving billion-dollar valuations so fast, right? Which we weren't seeing 10 years ago, right? If you look at Facebook as an example, how long it took them to hit a billion-dollar valuation, right? But now companies are doing a lot faster, and it's because of this network effect via Metcalfe's law. And then this is the last part that I find super interesting, which is the adoption curves. Each one of these platform technologies that you look at, or these areas, have their own adoption curve. And I suppose it's understanding where they sit in adoption curve. So if you want to ask yourself, like, where do electric vehicles sit in this adoption curve aspect? Because what happens is when it goes through that early majority up to late majority, there's a massive transformation in a very short period of time. And of course, a lot of wealth is created in that period as well. So some of those areas that right in that sweet spot, obviously, renewable energy and renewable energy tech, I am super proud of the companies that Wholesale Investor works with in the renewable. If you just go into CRIISP and go into opportunities and then search renewable, go and have a look at every company that comes up. We have got so many cool companies. Some are here today, some were here yesterday, but make sure you check them out. I love that we've got so many cool companies and obviously so many investors interested in that as an area. But this renewable energy trend is not going away anywhere. The sequencing of genomes is a perfect example of Wright's law, where 20 years ago it was $1 billion to sequence a single genome. Now it's down to $1,000, and that cost is coming down more and more. The next one is obviously genomics as a complete area, is that personalised healthcare solutions. You can see that this is becoming more and more obvious in health tech as an area, and then also in biotech as well. So said all the different ways, if we think about 10 to 20 years from now, if we think about genomes as being the human code for the body, then what sort of work can be done in that area? It's scary, but also exciting at the same time, and it's being predicted to be $1 trillion plus industry going forward, which is still in its very, very early stages. AI and deep learning. All of our businesses and the majority of our investee companies will start to utilize AI in some way, shape, or form. The cost of actually training AI modules has come down so much, and obviously the platforms that provide AI help so much with companies, whether it be from Google, whether it be from Microsoft, whether it be from Amazon, etc. I said for most of us, and what does this mean is that it means that our businesses can scale faster. Things that take, like for example, in the implementation of AI for Wholesale Investor, basically I was trying to decode how I actually do introductions. If you see me throughout today, you'll notice at any time, I'm basically bringing 2 people together at some stage, during a conference. And so then you start to think, how can you do that at scale? And that's, for us, that's the implementation of our AI and ML inside the CRIISP platform, which will sort of integrate completely with WI. But all of our businesses will have that, because that's where we actually scale the opportunity with our companies. And it becomes exciting because the cost of it's coming down. So once again, you factor in all those things, whether it be, and that's to me what I see as the Wright's law, is that I can be a lot more effective as a company in introductions with people, because previously I would have to rely on events or on promotions and so forth, but now it can be platform driven, and that becomes super exciting about what comes next. Obviously, the other part, I think just the infrastructure that goes into renewable energy, I find interesting, and I'll explain why in the next one. 3D printing, we've seen, I'm sure we've all seen different videos about how this is starting to dominate in so many different areas, and to the point that, and I'll use Tesla again, where they're trying to get they've got the gigapress to make one piece for the molds of their cars going forward. And obviously, anyone that's manufacturing anything, the less pieces they have, the easier the mass production becomes. Crypto, I said, so I should call it Web 3.0 now. That seems like the investor-friendly way of saying it. But crypto and Web 3.0, all of us have experienced this. Just think about how fast this has come on as an opportunity. Just think about the talent that is moving into this space. Think about the opportunities in that area. And just out of curiosity, so I know I do, who in the room owns some type of crypto, whether it be Bitcoin, Ethereum, or anything like that, right? All of us do at some point, right? So I'd be curious to know the NFT. Who actually owns an NFT out of curiosity? Okay, interesting. So to me, that was like what crypto was in 2017, 2018. And it's like NFTs, we sit here and think, how on earth are these people, making so much money, or what on earth is going on in this space? And it's like, yes, it's volatile, but so is this whole startup space, right? So crypto I find also interesting because, it says position as Web 3.0, and if you think about the role that Web 1.0 and then Web 2.0 had for the building of information networks and then the platforms, then it's basically the monetization of that becomes really interesting. So for me, I find the whole area interesting. This to me, seeing the Ethereum trend as far as how many people have Ethereum, this is obviously not including people that have it on exchanges. This is people who just have Ethereum wallets. The growth of that is so interesting when you see the adoption rate, and think about if you compare that to the internet adoption rate. I said it really by 2025, 2026, this could be 1 billion people. And that becomes, you think, okay, well, the more people actually moving into that space, the more value that gets created, the more opportunities that get created, because ultimately more applications will be built on top of it. And then secondly, there's a community value creation to it. So even for myself, I have to think about how can I create value out of our community outside of the introductions that we make? How can we use this new layer to create more value amongst the wholesale investor ecosystem? And ultimately, we all know that when this takes place, a rising tide lifts all boats, right? So whilst people focus on the platform side, effectively, if you think about the rise of social media, it's created, that rising boat has basically created all new sectors, it's created all new layers of opportunities. And for those of us that still remember classified ads in the newspaper, and we think about how that got disrupted by the internet, not only does it get replaced and disrupted, but then it gets 10x on top of that, right? So whatever's been built, that's why for me, I think it's super exciting to think about the wealth that will be created over the next 5 to 10 years could significantly exceed the wealth created over the last 20 years. And obviously that combination of platforms, marketplace, subscription models, the on-demand aspect, and the way sort of you can aggregate through platforms and then also provide offerings through that becomes really interesting. So that's my part. And then I think I wanted to give you context then, well, how are we thinking about then as a company, right? Because there's no point sort of talking about it and then not actually making sure that we're also part of this innovation change as well ourselves. Because for me, I've identified these are the problems for our space. I see it every single day, how fragmented it is. I see that most people are still using Excel spreadsheet. It's very much legacy driven in the way people do it. It's isolated. And there's very little data still in this area. And it's crazy when you think how much money gets pumped into innovation, but not really into the actual act which helps fund it, which is the capital raising area and the venture investment. So for me, the way I think about it is that I feel that software can, while I said, I love the buzz of networking, I love the energy that goes along with this, but really from how it can scale your access to opportunities and how it can scale for companies as far as their access to potential investors. To me, software and AI and ML have to lead the way because effectively it can create a personalized deal flow. So people can have that best of both worlds where they can connect offline, but also get access to what they want online in a streamlined and efficient way. And so for us, we've thought about how we can not only be software driven, obviously we massively believe in the value of ecosystems, and also it needs to be end-to-end, but more importantly, I said there needs to be AI behind it, because effectively what technology's role in our lives is to improve our experience and also to make it easier to access what we want when we want it, right? So AI becomes important. And then also the final part, which you guys wouldn't know about yet, but we will be integrating the WI and CRIISP site. And then in that, right now you're using the Brella app for this conference. Hopefully by the next conference, we'll have built our own ability to do meetings and conferences inside the app, right? Because for me, I want everyone to have the experience actually inside the platform and get to meet who they want to meet, sometimes before, sometimes during, sometimes after. And then the tools that go along with it. So last year we launched secondary sales. In the future, I'd love to give access to SME debt for companies, facilitate deal syndication, which we've been doing, and then lastly, book builds as well as part of that. So there's some of the features that the ecosystem does already. We just want to simplify it through the platform. And then people have been asking about WI Capital, which some of you would have seen the stand out there. So effectively, the reason for WI Capital is obviously we are a platform, but over time I've seen in the US, and especially in the US and also with the likes of sort of our crowd, is that we're in a unique position. Like, we've had 10 of our clients go on to become unicorns. We've had 65 of our clients go on to exit. So I don't know many VCs or investment groups that have been able to achieve that inside of this sort of APAC region. So it's an incredible milestone. So when we thought, how can we facilitate that? How can we simplify components and also still allow you to do what you do as an investor, but also provide access to some other opportunities. So secondary sales is one way. We also, late last year, we launched our own fund. We are providing the capacity to license other advisors because we acquired our own AFSL. Because the reason is obviously we've got our own ecosystem, we've got our own software, and then obviously we want to empower that through the platform. Investor-led syndicates, which you guys will hear a lot more about over the next sort of 12 months with different opportunities, and then and then the other one is sort of co-investments down the track. So this is the way we've sort of thought about how we want to position ourselves going forward. Effectively, we are ecosystem driven forward. We want to make sure that you get what you want. Obviously, the software enabled. We've launched an office in the UK. We actually have 7 team members now, 6 team members, sorry. And we're actually hosting a conference. We're hosting Emergence at the end of this month in the UK. And the investment-led syndicate, obviously it's very simple. It's just really giving people access to, sometimes with opportunities, they have very specific criteria which make it difficult. And so what the hope is the investor-led is if there's a lead investor in a transaction and they've got a final amount they sort of want to complete and it's sort of in our area of our interest, then we want to facilitate that through the actual database. So typically they're going to be led by an experienced investor. And then it just provides smaller minimums from 50. See the dollar signs in the wrong area. And then obviously just the risk diversification part for people. So the first 2 that we sort of highlight is we did this with Elixir last year and also Earnity as well. And it was, for me, I said, I'm passionate about that renewable energy tech area, and Elixir is one of those companies we've been working with now for 3 years. And then also secondary sales, we've worked with the likes of Impossible Foods through BMYG, Melbourne Victory, Surf Lakes and Mint. And I said that secondary sales part is something we're offering to a lot of the public unlisted companies that are unable to do secondary sales themselves. So we can facilitate that for them on their behalf. And a bit of a testimonial. So the fund, the last part I'll just talk about is the fund. The reason I did the fund with H&WI is H&WI, basically they're focused on how do you scale investing, and they've got a data-driven approach to how they actually do that. For me, it was really alignment because we're focused on how do you scale capital raising. And so what we've done now is we've isolated our first investment targets for the fund, and effectively what we're looking to do is pick some of the top accelerator groups in Australia and not only support them with money, but obviously support them via the platform and then support them via the WI ecosystem as well. Because obviously we've seen a lot of growth, and we know that sometimes when the companies get that help at the earlier stages, it can make a transformational difference for them. That's our team, obviously strong experience across the board, whether it be in private equity or also in capital markets. And just while I've got 1 more minute left, the current upcoming opportunities with WI. So 2 things I'll flag is that over the next couple of weeks, you'll see we'll be announcing our own capital raise for us. You guys would have seen over the last 2 years, we went from a team of 18 and basically we've hit milestones as far as launching in the UK, getting significant revenue growth already in the UK, acquiring our own AFSL, launching WI Capital, launching secondary sales, doing our first investment-led syndicates, and obviously growing the core business as well. And at the same time as that, growing the amount of interactions between obviously our companies and our investors. So everything we want to do, we're focused on investing to scale the business going forward so that we can create more opportunities for obviously our clients, and then also more opportunities for you guys as investors. And then obviously there's an ability to participate in the H&WI Fund. That's my details. I'm obviously around all day doing my best to network with everyone and interact with people.